Supply is the amount of something available to sell, whether it's a product on a store shelf or a service offered to customers. For example, imagine a vendor at a market with baskets full of apples ready for shoppers to buy. Demand, on the other hand, is how much people want to buy. If 10 people want apples, demand is 10. The more people want something, the higher the demand. When supply exceeds demand, there's a surplus. Think of unsold bread at a bakery at the end of the day, with loaves left over that no one bought. But when demand is greater than supply, there's a shortage, like when a new game console launches and sells out instantly, leaving customers empty-handed. The market naturally seeks a balance called equilibrium, where supply matches demand and both buyers and sellers are satisfied. At equilibrium, every product finds a buyer, and there's no leftover stock or disappointed customers. Everything is just right. But this balance isn't fixed. It shifts constantly as conditions change, like seasons, trends, or even the weather. Businesses work hard to find this sweet spot, adjusting their strategies to avoid lost sales or wasted inventory that can hurt profits. If the price is set too high, goods go unsold and sit on shelves, taking up space and tying up money. If the price is too low, you sell out too quickly and miss out on potential profits, leaving customers frustrated. Understanding this delicate balance is crucial for any business, big or small, because it affects every decision they make. It's not just theory, it's the key to survival and long-term success in a competitive market. Every price tag, every sale, and every business move is shaped by this constant push and pull between supply and demand. Mastering supply and demand means mastering the market, and that's the foundation of business success. Supply and demand shape the prices of everything, from iPhones to hand sanitizer. It's a force that quietly influences our daily lives, whether we notice it or not. When Apple launches a new iPhone, limited supply and huge demand let them charge top dollar. People line up for hours, eager to get their hands on the latest device, and that excitement drives prices even higher. During the pandemic, hand sanitizer prices soared as demand exploded and supply lagged behind. Suddenly, a simple product became a hot commodity, and prices reflected that urgency. The same principle works in reverse. Too many winter coats after a mild season means stores slash prices to clear shelves. Excess supply forces retailers to offer deep discounts just to move inventory. Businesses constantly adjust prices based on what's available and what people want. They monitor trends, anticipate shifts, and react quickly to changes in the market. Concert tickets for a famous band? High demand, high price. Fans are willing to pay a premium for a chance to see their favorite artists live. A bumper crop of apples, high supply, lower prices. When there's more than enough to go around, prices drop so stores can sell it all before it spoils. Companies watch trends, inventory, and competitors to set prices that move products and make profits. It's a constant balancing act, requiring both data and intuition. The balance between supply and demand is the heartbeat of every pricing decision. It's what keeps the market moving and businesses thriving. Miss the mark, and you're left with empty shelves or unsold stock. Either way, it's a costly mistake that businesses work hard to avoid. Get it right and you thrive, even in a crowded market. Success means finding that sweet spot where customers are happy and profits are strong. Every product's price tells a story of scarcity, desire, and strategy. Behind every price tag is a careful calculation of what people want and what's available. That's why understanding supply and demand is every business's secret weapon. Mastering this balance is the key to staying ahead in any industry. Supply and demand also drive the job market. The supply is workers with certain skills. Demand is how many companies want those skills. High demand and low supply, like AI engineers, means higher salaries and fierce competition. Low demand and high supply, like entry-level retail, means lower wages. Businesses must weigh labor costs and talent availability when hiring or expanding. Specialized skills command premium pay. Common skills keep wages down. Where and how a company grows depends on this labor balance. The job market is just another marketplace, ruled by supply and demand. Supply and demand don't just shape the prices of goods, they also govern the market for money itself, influencing every business decision. The supply is the capital available for loans, sitting in banks and financial institutions, ready to be put to work in the economy. The demand comes from businesses and individuals eager to borrow, whether to launch a new venture, expand operations, or simply manage cash flow. The price of this money? Interest rates. When money is plentiful, interest rates drop, making it easier for businesses to borrow, invest, and grow. This fuels expansion, hiring, and new ideas. But when money is scarce, rates rise, borrowing gets expensive, and companies often pull back on plans, delaying projects or even downsizing. Central banks step in to adjust the money supply, using policy tools to influence this delicate balance and steer the entire economy. Low rates can spark innovation and risk-taking, encouraging entrepreneurs to pursue bold new ventures and invest in research. High rates, on the other hand, force caution and efficiency, pushing companies to scrutinize every expense and prioritize only the most promising projects. That's why business leaders watch interest rates closely, timing investments, managing costs, and planning for the future with every shift in the market. The flow of money sets the pace for growth, hiring, and innovation, shaping the rhythm of business life. In every industry, the supply and demand for capital drives ambition, fuels opportunity, and ultimately determines who succeeds in the marketplace. Every business decision comes back to supply and demand. Pricing, production, hiring, and investment all depend on finding the right balance. Too much supply or too little demand leads to losses. The opposite means missed opportunities. Companies use data and research to predict demand and align supply. Labor decisions, wages, hiring are shaped by the talent market's supply and demand. Mastering these forces helps businesses navigate change and competition. Supply and demand are the compass for every leader, from startups to global giants. In a shifting world, understanding them is essential for lasting success. Thanks for watching. Subscribe for more simple, smart business lessons made for everyday leaders like you. And don't forget to write your comments and questions below.